still helping out businesses in the Windsor-Essex region, and Marianne Wensler-Weeb, the Vice President of Financing and Consulting for BDC, Business Development Bank of Canada. Thank you to everyone who submitted their questions in advance. If you turn on your chat function, you'll see information for today. We've posted some information about the ground rules and some ways of how to ask a question, as well as the information again with the names of our panelists. Please submit your questions in the chat to the panelists. So we do have a few people who have called in today. I apologize, everyone's microphones are muted and their cameras are off, except for our panelists. So if you do have questions, you're gonna have to send them to us afterwards for those who have called in. For everyone else, please use the chat and send those questions to panelists. Those questions will be seen by our panelists and by Mike Bilton and I, who will be moderating today's session for you. Oh, good morning, Mike. Before I turn things over to Nancy Crichton to start us off with the program overview, I think it's appropriate to acknowledge two things. First, today is the National Day of Mourning for workers killed or injured on the job. Not only is that something that manufacturing recognizes every year, but it's particularly relevant for us right now as we're battling and our frontline workers are battling COVID-19. Secondly, while we're in virtual space with a webinar, on behalf of those in Southwestern Ontario, we would like to acknowledge the presence of the Three Fires Confederacy peoples in our region, the Ojibwe, the Ottawa, the Potawatomi, and the Huron-Wendat. Nancy, with that, I'll turn the speaker over to you.
Thank you, Shelley. Thank you all for joining us today. I realize that the word unprecedented is used much too often. This is what happens when we're facing a threat of a novel virus. Since it emerged globally in the last day of 2019, our governments have worked at lightning speed in an unprecedented manner so that the general population can physically distance to not overwhelm the health system while we get the spread under control. The COVID-19 outbreak has emerged not only as a serious international health concern, but as a threat to economies worldwide. While the situation continues to unfold, the province is working with its partners to act urgently to protect the people of Ontario. It is a coincidence that we meet on April 28th, the day of mourning for workers injured or killed on the job. As we look to reopen the economy, we all want to ensure that worker and community safety in the age of Corona is going to be a safe one. We're able to do the right things to protect workers and our communities because our governments have acted in concert to address the health and economic fallout. The actions taken to date have been aimed at one purpose: to allow for essential work to continue, to allow for those not deemed essential to isolate at home, and to set up supports so that we can re-engage with minimal loss. The objective is to keep businesses and employees and employers engaged as much as possible and make sure no one falls between the cracks, all while setting up systems that discourage fraud. I've been able to witness the formation of these responses in real time. Minister of Small Business, Ng, hosts daily calls where the gaps are recognized with input from 900 to 1,000 businesses and business groups from across Canada. Responses to close those gaps has been swift. Meanwhile, the provincial and federal governments have coordinated efforts with the procurement processes for COVID goods and services being fast-tracked with emergency protocols. Our whole ministry has been reorganized to address this procurement challenge. The business community, and especially those in manufacturing, have played an extra special role. And you have absolutely inspired me. Governments sent out a call for help, and boy, did you answer that call. The innovation and ability to pivot to supply the goods and services needed to assist our healthcare system has literally been overwhelming. Everyone wants to do their part. My attitude is one of gratitude to you and every business across the province. The Ontario Together site with over 18,000 offers of support, reports that we were able to secure 20 million masks, 1 million face shields, 5.7 million gloves, and 600,000 gowns just this past week. Today, we're talking about the new supports to businesses that can help you with keeping your workforce active or ready for recall, and the cash flow programs that have been put in place to help you weather this storm. You are here to find out information about the wage support and the cash flow programs, so here we go. The first tranche of support came out as support for workers under WorkShare, EI, the Summer Jobs Program, the temporary 10% wage subsidy, the Canada Emergency Business Account with banks and credit unions. Then we had a second round of funding. That second round we're seeing emerging right now. Yesterday, it opened up with CEWS, the Canada Emergency Wage Subsidy, that can provide up to 75% of the wage subsidy for your workers, working or not, or ready to come back to work. The NRC IRAP Innovation Assistance Program closes tomorrow, and that is one program that was designed to close the gap for those companies that are new or scaling up and cannot apply for the Canada Emergency Wage Subsidy with the revenue rules. So just keep track of that one as well. The Business Credit Availability Program, the BCAP, with the BDC, the EDC, and banks and credit unions. You'll learn more about the details around that today. And that is for your cash flow issues. The third round we're seeing coming up will be in a Canada Emergency Commercial Rent Assistance Program. That should be available in mid-May, and the Community Futures and FedDev supports that are going to be available for business. And then the fourth round, I think we'll be seeing things coming around coming back to work. How do we support companies in getting back to work? So with that, I'll turn it over to Mike Bilton, who is going to talk to you about the survey results and why we're here.
Hi, thanks Nancy, thanks so much. Welcome everyone and good afternoon. In the interest of time, I'm just going to say a quick thank you and a shout out to my amazing facilitators here, and Shelley and Carly and Diane. We've been working hard around the clock trying to get prepared for this. So I'll keep it short. With our first set of surveys that went out, we heard many members and non-members get right to the point of status of manufacturing, whether it be human resources or shipments of inventory or projects being delayed or deferred, et cetera, et cetera. We realized over time after a few weeks that it had shifted to a bigger challenge, which is that of course, finance and cash flow. So we decided, well, it's best that we get a team of experts. I myself am not an expert in the world of finance, but I've surrounded myself with people who know it inside and out. So we thought we'd bring the information right to you firsthand. So with that in mind, a quick note is that as CAM has always acted as a Catalyst Association and information sharer, we will do the best we can with our panelists to answer the questions as deeply as we can go without getting into the realm of liability or legality. So for any other questions down the road, and I suspect there's going to be plenty of them with more detail or more information needed, I would recommend either a one-on-one or to reach out to each one of our panelists separately to make sure you get the information you need. So with that in mind, thanks once again. And I've got, I'm going to try and share my screen here so everyone can see the content of really the first question that is really the burning question that really revolves around the CEWS. That has become front and center on the minds of the most of the respondents. So I'll get right to it, and hopefully everyone can see my screen here. This will be the only question that I pop up right now to share as a graphic. And then from there, the panelists in their responses are free to do what they need to do to use sample illustrations, graphics, whatever it is they may need to relay the information to you. So here goes. Hopefully everyone can see this question? Can everyone see that? Thumbs up. So question one, right to it. And I guess this question would go to Jason Grech, because I know you're front and center on CEWS. There are so many aspects of the Canada Emergency Wage Subsidy. I'm confused where to start and how to go about it. Can you help? So with that, Jason, I'll turn it over to you.
Sounds good, Mike. Thanks. And good afternoon, everybody. Happy to help in this role and in many other roles. I think that we'll jump right into answering that question. But just at a very high level, I think one of the things that we've been seeing from our clients and even just other members in our community is an unprecedented amount of questions with respect to business viability. And we're staying in our lane. You know, we know what we're good at. Our expertise is finance, but we're happy to help in many different ways. And when you talk about business viability, the most important thing, and Mike will get into the CEWS program because it's a component of it, is cash flow and the ability to forecast your cash flow. I can't emphasize enough, if any of you are already receiving the multiple emails that we're sending out to our distribution lists, an integrated cash flow model is by far the most important thing that you can be doing right now to ensure business viability as you move forward. And an integrated cash flow model would probably want to extend out about 13 weeks and use that cash flow model integrated with your debt covenants, integrated with your balance sheet. The CEWS program itself is a component of the cash flow model. So if you think about that question, Mike, it's by far the largest available funding for all of the businesses that are on the call today, and it should be a part of your cash flow model. The majority of the businesses on the call today will qualify, and you should include that subsidy in your cash flow model. I think, Nancy, it's a $72 billion or $74 billion funding mechanism that the government has rolled out, the highest in their history. So clearly they want everybody to apply. So Mike, I think the question really talks to a lot of the issues that a lot of our clients have been having, and also I'm going to share my screen here. Hopefully you can see that. There, did that come through okay?
Yes.
So I have a deck with a number of different items in here, and I figured CEWS would be at the top of the list. But this is the number one question that we're getting. So I'm just going to proceed kind of through the deck itself. The number one question that we're getting is, it's confusing. There's a lot of moving pieces. I'm just going to go forward here. There's a lot of moving pieces. Where do I start? Am I eligible? What about this revenue recognition test or this revenue test? That seems very confusing. So I'm going to try to just go through a few steps, and then we can take questions as they pop up. So the CEWS program itself, you got to take this in an approach where you're looking at 1 through 12, like what are all the steps I need to take? And the first step is, are you an eligible entity? That's the perfect place to start. The majority of the folks on the call today will be eligible entities. You can see in here that as long as you're not exempt from tax, and there is some legislation that talks about who's exempt from tax, you are an eligible entity. The reference period is the second thing that you need to consider in general. Just be aware of it. So there is this requirement that there is a drop in revenue in order for you to be eligible for the CEWS program. The drop in revenue is a couple different buckets, and you can see in here on this particular slide, there's 3 reference periods, and you're looking at a drop in revenue of 15% in the first reference period, being March, the second reference period being 30%, April, and then May, another 30%. There are some deeming provisions as well, which we can get into later on. I don't want to steal all the time on the call, but essentially a deeming provision states that if you qualify for March at 15%, you automatically qualify for April. The biggest question, the decline in revenue. How do I measure this decline in revenue? So keeping in mind that reference period that we just talked about, the decline in revenue, I'm pretty amazed actually when the legislation came out that they introduced so much flexibility. It's clear the government wants to help. As a practitioner, I'm very satisfied with what I see. As an informant to our member base, I'm trying to make sure that individuals understand that irrespective of your revenue recognition model, you should be eligible for CEWS if you feel like your business has had an impact. If you're feeling an impact to your business, whether it's sales or collections, irrespective of your revenue recognition model, you should qualify. And the way the government is getting us there is by this number 2 item here on the slide, which talks about accrual basis or cash basis. For all the accountants on the call, I know that everything we learned in school and everything we learned as we articled after taught us that if we go down the cash basis, we're doing something wrong. Well, this is the one time that, along with farmers and fishermen, you can actually claim the cash basis of accounting in order for you to substantiate a 15% revenue reduction. Now, that revenue reduction, this slide is a bit wordy, but revenue reduction, some of the legislation that points to this slide is with respect to the normal course of business. So they're asking taxpayers to calculate that revenue reduction based on the normal course of business. But then at the same time, they also throw in cash basis. So clearly those two things are the opposite. And what they're basically stating is, in the normal course of your business, we want you to record your revenue based on cutoff, based on shipment, based on whatever your normal course is. Use that as a basis. If that doesn't work, then go to the cash basis. And cash basis is just that, cash receipts. So literally, you start counting the dollars associated with your cash receipts, and you use that as a basis for revenue, comparing apples to apples. So you're always comparing a prior period, say it's March 2019 to March 2020, cash basis, or accrual basis, depending on which method you pick. Then you've also got the option of picking that reference period of January and February 2020, the average of January and February 2020, to the March period, either cash or accrual. There's a few elections for affiliated groups which are very specific, and I won't get into them in the interest of time. The wage test itself is a little bit complicated, to say the least. So I'll get this at a high level, Mike, and then maybe we can just transition. So the wage subsidy part itself. So once you've got an eligible entity, once you know that you have a revenue decline based on whichever period you pick, so try to pick the one that works best. Oh, and I should mention that whatever method you pick, you're stuck with for all 3 claim periods. We're in the first claim period right now. So you want to do a little bit of forecasting and also a little bit of looking at today, April 28th, because that's the second period, and saying, will that revenue method that I pick also work in period 2 and period 3? When you get into the wage subsidy itself, it's a test that's based on the greater of 2 components. The first component and the second component are measured individually. And the first component is the lesser of 2 things. And those 2 things are 75% of what you actually pay that individual, or $847. And the second component, remembering that the test is the greater of the 2 components, the second component is the lesser of the remuneration you paid. So once again, what you actually pay that person, up to a maximum of $847, so similar to the first component, with the added caveat that the lesser of test includes 75% of the employee's baseline remuneration. And the employee's baseline remuneration is based on what they were making on a pre-crisis basis, which is January 1st, 2020 to March 15th, 2020, which is about 10.6 weeks. So you actually have to take all that remuneration divided by 10.6 weeks. You've got your average. There's a couple of scenarios here, real quick, guys. A couple scenarios where you can see how much the individual is actually being paid and how much their reference period, pre-crisis is the reference period. So how much their baseline remuneration, which is also synonymous as pre-crisis, how much they were making in that period. So what these scenarios point out, if we flip to the next slide, if you look at in particular number 3, you can see how the individual was being paid $800 in crisis time, so now being paid $800, but pre-crisis pay was $1,300, And because of that, if you go to the very bottom of column 3, the amount of the subsidy is actually $800. So the employer is given 100% of that subsidy back for paying that individual. And in some cases, that also includes CPP and EI. Overall, Mike, there's a formula that's referred to as A minus B minus C plus D. The A part is the wage subsidy. B and C are grind downs to the wage subsidy based on the other subsidy, the TWS. And then the plus D component is the CPP and the EI for anybody that's been furloughed. I think I'll leave it at that.
Okay. Okay, Jay, thanks a lot to digest there. Thank you very much for sharing. At this time, we'll keep the questions rolling. I'll hand it over to Shelley.
I'm just
Yep, go ahead.
scanning. I'm just scanning. Thank you, Michael. I'm just scanning the questions that came in specific to CWS, because as Jason was speaking, I guess people had more questions. So I heard you cover about revenue recognition models. So that was one of the questions, was cash method versus accrual. You know, how does that work? So you addressed that one already, Michael or Jason. And calculating eligible wages for CWS, we're looking at when remuneration is actually paid.
Yeah.
So they had some specific questions, and you addressed that in your presentation.
Yeah, maybe I'll just add to that one. I think I saw that in the text screen. So you have to fit your pay period into the reference period. So if your pay period doesn't align with the actual qualifying period, the reference period, which I don't think it will, what they call for in the first period is March 15th to April 11th. So you literally have to take the remuneration paid March 15th, 16th, 17th, 18th, 19th. So if that first pay period that includes March 15th and that last pay period that includes April 11th don't line up, you have to prorate. Okay. So whatever amount of days are within that period, you just prorate that actual amount. Yeah. And Shelley, you just reminded me of something else. The one thing that's important for everybody on the call and anybody that's putting an application in is to keep all of your documentation and build a documentation bank, a folder. That's what we're doing with our clients and even issuing reports. And the reason for that is that we found out that the CRA is doing pre-audits on the applications themselves. So starting yesterday, the applications went live. The pre-audit is going to be pretty high level. It's going to include just checks on business numbers, checks on compliance, also reasonability check on payroll. So they're going to take a look based on an algorithm, how much of a subsidy claim you're putting in versus what your payroll withholdings have been in the beginning of 2020 and also 2019 to substantiate a reasonable base for the subsidy itself, and either say yay or nay to, wait a minute, this subsidy is way out of line with what your business usually does. That's all they're doing. And then there's a massive attestation that you have to make, which includes criminal penalties if there's an error. And it's an egregious error that you've, I guess error is probably the wrong word, but if they feel that you've done something to, they're calling it gamesmanship. And so if you did something on purpose, they're going to apply a penalty, including the criminal penalty. So they're going hard to make sure that there's no fraud in the system, and making sure that everything's documented. And then in the post-audit period, we found out that what CRA is planning on doing as soon as June and July, which I'm not sure how they're going to pull off June because it's pretty soon, but as soon as June and July, they're actually going to start calling you and they're going to start requesting documentation to support your revenue and your remuneration figures.
Wow.
Sorry, Shelley, that was a long answer.
No, no, I can just imagine everyone's making notes as they're going through this. We did have one, I think, just looking to clarify. Are you looking at the March 1st to March 31st for the comparison period, or March 15th to April 11th, 2019?
So the revenue decline reference period is very clear.
Okay.
Maybe I'll put it back up. No, I don't need to put it back up. But so essentially, there's a couple options. And the options that you're looking at is irrespective of whether you pick cash or accrual. So put the cash or accrual decision on the sidelines for now. What you're looking at doing is being aware of what your company's situation was and then fitting in cash or accrual and seeing what works best. You're taking March 2020 compared to March 2019. Or you are taking the average of January and February 2020 compared to March 2020.
Okay, good. And hopefully that answered the question that we had. Okay, so we're going to move on from CEWS and we're going to talk about CEBA. So we had a specific question about CEBA asking, will they be easing the restrictions for the $40,000 loan that has 25% forgiven, or CEBA? Who on our panel would like to tackle this one?
I can tackle that one, Shelley.
Okay, thank you.
If I could just quickly, I just want to say thanks very much to Mike, yourself, Diane Carley, the amazing job of CAM and Automate Canada, just for being such a strong voice right now in the business community and doing surveys like you're doing. And today is a great example of how you're helping all of us through this. Kudos to you. I don't think that was structured into the call. So I'll just preface this because there wasn't a question on this, but I want to make sure people are aware before going into CEBA. The FIs have been working very hard talking to businesses. And while I'm talking today specifically about programs that have commonality to them, there may be little flavors or nuances between the FIs you deal with. So just be sensitive to that. I can certainly speak about RBC's exact positions, but overall there may be a little bit different. You need to talk to your primary FI, but there's a ton of commonality here in these platforms, so it should still be useful. I also want to point out just quickly that before CEBA, I think Nancy spoke to the first and the second waves. And before CEBA and BCAP and Sue, some of the programs, the FIs came out pretty early days trying to offer some forms of relief. So I want to make sure people are traveling with that. They're still available. I'm sure many of you have already taken advantage, and I saw in the survey you did. But there's many different forms of support here, and they're stackable and they work together. So it's important to talk to your financial advisor, talk to your banker, and make sure that people who understand your business, your structure, are helping layer in all of these different forms of relief. So I'll quickly go through some of them. The FIs collectively have offered up deferral principal on various types of loans: commercial mortgages, term loans, equipment loans, leases, conditional sales contracts, up to 3, 4, 5, 6 months. And that's pretty well across the board. There's automatic increases in operating lines, and I saw that in the survey. 10% quite easily and automatically, and then beyond that with a little more work involved. Credit card waiver of payments and reduced rates have been implemented. Waiver of electronic, obviously in the environment we're in, people are very sensitive to removing the obligations of employees and yourselves having to go into bank branches, and so digital adoption's really gone up. So those setup costs, those transition fees are being waived at the FIs in many cases. So again, talk to your FI. And then even authorities in terms of CEBA and allocating some of these programs and those reliefs have been brought to the local level so they can move more quickly. So there's a lot of things being done kind of right out of the gates, and then we're layering in some of the government programs. So I'll jump into the actual question, which was about CEBA, the Canada Emergency Business Account. And I'll bring a slide up here quickly if I could. Share screen, hopefully I do the right one. Can you see that? Okay, perfect, thank you. So if you're eligible, you should absolutely consider this program. July 15th is the last day to apply. With 0% interest, you really have no reason to delay signing up right away. For context, as of last Friday, RBC's funded over 100,000 applications. So $4 billion has come out of just this FI alone through CEBA. So you can just imagine through all the different FIs how much that will add up to be. Important to note, and I think this goes to the heart of the question that was asked, it's a Government of Canada program. So in terms of eligibility and specifics and parameters, really the financial institutions are acting as facilitators on behalf of the government. So we don't have any control over that, the programs themselves, and they're fairly rigid, they're fairly specific. But that being said, from the point of launch to today, we've already seen some changes. We've seen the payroll amount requirement for eligibility move from 50,000 to 1 million to 20,000 to $1.5 million. So again, I think it points to just staying current, keeping in touch with your financial advisor or banker, and making sure that you're knowledgeable on any changes that have been done to the program. So I'll quickly go through where it's at today. In terms of key eligibility requirements, it's really you're having a primary business account and a registered business as of March 1st, 2020. And again, one of the key parameters is that summary remuneration or payroll that you have between $20,000 and $1.5 million. And that was changed after it was launched, and it's the current state of the land. This is an interest-free loan. So basically you have $40,000, 0% interest. And that goes for a period until January 1st, 2023. And one of the interesting elements of this is that if you repay 75% of the loan before December 31st, 2022, 25% of it will be forgiven. So that could be as much as $10,000 if you do the whole $40,000. So and that's non-taxable. So it's really a great program. After the December 31st, 2022 period, if you haven't repaid it all, you can convert it to a 3-year term loan at an annual interest rate of 5%, and the full payment will not be due until a bullet period, which means all at once at the end, on December 31st, 2025. So it's a great emergency, quick injection of funds for a lot of small businesses. I'll just point out a couple key points. It's really designed around COVID-19 relief. So you'll see eligibility here around operational expenses, working capital, rent, payroll, utilities, interest costs. It's not for obviously dividends, shareholder repayment. There's ineligible purposes such as those. It's for the business and helping through relief for COVID. It's only offered through your primary FI. And again, as of March 1st, 2020. And some common questions we often get are, what if a company has multiple legal entities? So this is one of the nuances of the program. Each business entity, legal entity, may enroll for CEBA separately. So you may benefit from several CEBAs if you're structured that way. If you have one entity that has numerous locations or divisions, you can't benefit from that same situation. So it's important to know that. And if you do take advantage of CEBA, you can take advantage of other programs. They can be stackable. If it's a non-Canadian resident, yes, you're still entitled to CEBA, provided the business has an address in Canada and it meets the other CEBA eligibility requirements. Those are some of the more common questions. I thought I'd just hit them off right away. So it's a great program. If you haven't looked into it, talk to your primary FI, and I highly recommend you take a look.
Great. Thank you very much, David.
No problem.
Okay, Mike, did you have the next question for our panel?
Yeah, I do actually. So the next question that I have for the panel is regarding BCAP, BCAP. The question is, I'm interested to hear what they have to say if your payroll is over the $1.5 million they set the limit to. As of now, we do not qualify for any of these subsidies.
So I'll start off, and so I can talk about BCAP. That question intermingles a couple of programs, so we'll take that apart at the end. But with respect to the BCAP element, and there's going to be 3 of us that answer this because it's a pretty comprehensive program as well. So BCAP stands for Business Credit Availability Program, and it's the small and medium-sized enterprise loan and guarantee program that's going to enable about $40 billion in lending to take place. And this is going to be delivered through FIs. However, BDC and EDC play a role in supporting the financing. So eligible companies could obtain up to $12.5 million in total through 2 lending streams. So I'm going to talk about the first one, the BDC part of it. I'll transition over to David Offenbacher for the EDC, and then we're going to need David Oakes to bring it home and talk to the practical side of application. So the first, the co-lending program for small and medium-sized enterprises. So under this stream, stream, BDC with financial institutions will co-lend to SMEs for their operational cash flow needs. And again, this is all dealing with COVID-related issues. So if you're impacted directly or indirectly by the COVID situation, you're eligible to proceed with this as well. So the maximum for BDC is going to be per borrower $6.25 million. So $5 million from BDC, 1.25 from the house bank as well. Now, the cool thing about this is the financial institution is going to do the underwriting and due diligence, the credit structuring, and then eventually the funding for clients as well. So one financial institution managing this, and it's to simplify the process and make it faster. So as I said, this is for eligible companies that have been financially impacted by COVID, but they need to demonstrate that they were financially viable prior to COVID to qualify. That's one of the other things as well. So that's the BDC side of it. It's a co-lend, and on the screen here, thanks, David. Again, each FI is going to have some different nuances to it, but in the spirit of the program overall, the term is up to 10 years, and some of these can be amortized up to 20 years. It's just each situation is treated uniquely when you go talk to your lender as well. So that's our side of it. Now I'm going to transition to David Offenbacher to talk about the guarantee program.
Thanks, Marianne. The EDC BCAP program's mandate is very similar to that of BDC in that it's intended to support companies that are experiencing hardships as a result of the COVID situation. And again, it's intended to support operating expenses, working capital, payroll, inventory costs, those types of things. The cap is identical, 6.25 million, and can be stacked with the BDC portion. Operationally, it's a little different in that we're in the background working with the FIs to provide a guarantee. That's invisible to you as the borrower in that the guarantee is provided to the bank, and again, it's 80% of the loan amount. The amortization and term on this is 1 year. It's intended to be a shorter duration than the BDC program, but that 1 year term can be extended for an additional year should the company not be in a position to finance the repayment. And similar to the BDC program, the entire underwriting of the facility is through the FI. There may be some differences as to how the individual FIs underwrite the risk, but it's intended to support the operating expenses of companies that are experiencing hardships.
So good stuff, David. Thank you. So really now to bring it home, the question is, you've got to go talk to your bank as well. So David Oakes, can you bring some clarity around what this is going to look like and how the organizations are working with the FIs?
Absolutely. Yeah. Thanks, Marianne. Got my mute off here. Good. Okay. So, really these are great programs and a great, very current. So I would say all the FIs right now are very much ingrained in moving forward with these, talking to our clients proactively, making sure they know what's available to them. As demonstrated in the chart, there's common elements here between them. And each FI here will have a little different take to it as well in terms of risk assessment information they're looking for, but there'll be a lot of consistency across. So I can tell you, for instance, an amortization of 20 years isn't maybe a starting point for all the FIs. So don't just necessarily take what's on the slide here. There's different nuances to the FIs and how they come at it, but certainly it's a fantastic program and what's being looked at very closely. Eligibility requirements, again, similar to CEBA, it's intended to help with COVID relief. It's not intended for equity pools, shareholder loan repayments, dividends, even refinancing existing debt, unless that debt was put in place for the purposes of helping the company during COVID crisis in the last month or so. So really, it's meant for COVID relief, and part of that will be looking at the company's ability to support this type of lending before a crisis occurred. So looking back pre-Feb 29, 2020, was the company in good standing? Was it able to support more debt? The loans aren't, the program eligibility isn't there, where businesses were really suffering already coming into the crisis, and this is kind of tipping the scales. So I just want to be clear about expectations there. There's some other eligibility requirements. Happy to go through that in more detail. It's not necessarily specific to the industry group we're talking about here. But unlike CEBA, this is really administered by the banks. So where CEBA is more of an administration pass-through of a government program, this one includes risk acceptance by the banks. So, I think Jason made a comment early on that really hits right in the nail on the head, which is understanding your cash flow and the cash flow projections. The old adage, cash is king. And it's really understanding what that cash burn is in your business, how long you have during the current crisis, and what your forecast shows coming out of a cash burn situation and coming back to a positive cash flow situation, taking into account the ramp up in working capital you may need to invest in. So FIs will be looking for those projections. And I can say there's a lot of work being done in the FIs to help with that process. Obviously, depending on the size of your business, you'll be relying on your accountants, you may have controllers, you may have strong internal capabilities, but the FIs are also investing in helping clients with creating those cash flow projections, walking through them with you, making sure that we're doing this collectively to try to get the right outcome for you. So please make sure you are talking to your FI. Obviously, one of the key components of accessing this financing will be being able to show the numbers and projections, but also being able to talk to what you've done and the COVID impact on your business. So what's your strategy to address COVID? Understanding the impact on your immediate sales and operations, what programs you've tapped into, whether it's CEWS, whether it's CEBA, layering that into your projections, and understanding what the net working capital ending need will be to help access those programs. So hopefully that doesn't sound too daunting. Again, work with your financial advisors. As we're doing more and more of these with our clients, there's certainly been consistency around the approach. So maybe I'll leave it at that and see if there's more questions on that we can get deeper, or maybe it's directed elsewhere.
Well, we do have one question on that, David, and it says, if you receive this loan, will it affect the debt to equity ratio on financial statements, and will banks take that into consideration if you don't meet your expected ratios?
So great question. It will be captured as debt. So yes, it will have an impact on your ratios. That's my current understanding of the program. And I say that because I was reading some legal briefs just over the weekend, actually, about treatment of BDC versus EDC. So if there's, again, stay close to your banker. If there is a change on that, some of these are being finalized real time. But our current understanding is all of it will be treated as debt, as would any other debt. And certainly when we're looking at your projections and looking at where we expect you to be, we're going to be looking at ratio setting based on that realistic scenario. So really, where you may have existing covenant structures, if we're layering in new debt and layering in a new relationship with you on the basis of this BCAP loan, we're going to be factoring that into how we set your covenant structure going forward. So that really should be taken into account.
Okay, thank you very much.
Yep.
And it looks like, thank you, Jason Grech, for answering a question in the chat that someone had. I wasn't aware that CRA was publishing a list of companies who apply for CEWS, and you went on their website, and yes, they are. So how they're going to do that looks like is still open. I see a question here, and I think this is a very interesting one, and they're inquiring about the programs for a business that was just founded in 2020. So we have an intrepid entrepreneur who has started their business this year. Is CEBA or BCAP the right program for them, or is it better to direct them to the programs that have been announced through IRAP, NRC IRAP, I believe it is. I don't know who wants to take that particular question.
So, David, why don't you tackle the CEBA? There's a date, right? So the business had to be established, what date? March?
So basically, Feb 29th, 2020
Okay.
would be your cut date. So if your business was incorporated after that, you would not be eligible for these programs.
Right. So I would say, so this begs the question where we need to talk in terms of one size does not fit all, right? You know that, and hopefully by the end of today, and you know, with the discussion that we've had, there hopefully is enough tools for everyone to you know, explore and help somebody out like this as well. So you know, maybe it could be a BCAP, you know, situation for a young company as well. You know, maybe it's a direct approach to a BDC or EDC outside that as well. So we've got a working capital COVID loan, for example. So once government programs are exhausted, that we've talked about today, the CEBA, Qs and things like that, once BCAP's been exhausted, if there's still a need, for example, companies can come to us, and we've got this working capital loan where you can access up to $2 million, you know, to help with cash flow needs and, you know, maybe to supplement your line and things like that. And it's specifically designed for the situation at hand. So 12 months, you know, interest only payments and abbreviated repayment beyond that as well. So for the young company, I would say you might need to knock on a few different doors. But you know, the best thing that I can say at this particular point though is start with your house bank, you know, and start with the commercial account manager from your house bank, because they know you and they know your business and they know how to guide you. And then from there, you know, again, organizations like EDC and BDC, we've worked together a long time, you know, to get solutions that are really entrepreneur centric as well. And, you know, and hopefully that can help. And then lastly, too, like the Government of Canada's COVID-19 website has information.
The other thing to take into account is if they qualify for the NRC IRAP Innovation Assistance Program, that closes tomorrow. They can find out fairly quickly if that's a tool that they can use. If they can't qualify for the CEWS or the Canadian Emergency Wage Subsidy, then that is there for companies that are startups and companies that are in the innovation space. And it's for 12 weeks worth of wage subsidy for their employees.
Yeah, Nancy, that's the right ordering. Since it closes tomorrow, for sure,
Yeah.
whoever asked that question should look into the IRAP funding and maybe email Vladimir. But the CEWS program is also available for startups with a day's grind down in the test, and that was introduced in the second backgrounder that CRA issued. So whoever you are, startup, the CEWS is not leaving you behind.
Excellent. Thanks, Jason. So I'm just looking through the questions here, and I saw, tying back into the CEWS, there's a question here. It says, regarding the CEWS, is the maximum of 847 the government's 75% portion, or is 847 divided 75% government, 25% employer? Can you just go back and recap on that one, please?
Yeah, sure. The 847 can be entirely the government portion. It doesn't have to be split 75-25. It all depends on each individual employee and the greater of test of those two components that I mentioned before. Interestingly enough, early on in the discussion, and in particular when the finance minister, Mr. Morneau, indicated that they're coming up with a new program, they said they're highly encouraging employers to top everybody up. They're going to do 75%, top them up the extra 25%. When legislation came out, there was zero mention of the 25%, absolutely nothing. And then it pretty much settled down after that, where he wasn't even mentioning the 25% top up, where it started slowing down. So there was a lot of discussion from business that said, do we really need to do this 25% top up? And the answer is no. You don't have to do that 25% top up. And in some situations, you'll end up with paying your employee 847 and you'll get 847 from the government, a pure flow through.
Excellent. Okay, I hope that, I'm sure that that answered the question. I see another one here, and forgive me if we've already touched on it, but I just want to go over the question. It says, if you are deemed to qualify in a subsequent period, however, an increase in revenue rather than any decrease at all, would the increase disqualify as a condition for eligibility? Is a revenue reduction?
Yeah, the way the legislation is currently written and the way that we understand the legislation, so it's the raw legislation that's out there, right? Everybody's making decisions on raw legislation, which is rare in tax. Usually you've got case law that supports it and interpretations. We have neither of those. The legislation as it stands now automatically qualifies you for that second period, irrespective of the revenue decline or increase, sorry, in that second period.
And the same can be said for the second to third period. So if you are qualified in the second period, you are deemed eligible for the third period.
Right. Yeah, they really are trying to be as helpful as possible. That's the feeling I got. There's a couple more questions, Mike, that I see here. Do you want me to just jump on them real quick?
Yeah, sure. I mean, especially because we're on the CEWS, and it seems, again, it seems to be that this is the focal point of most everyone's responses and questions. So yeah, I mean, feel free and don't be afraid to tap on the shoulder of your panelists.
Yeah, so there's two, and I'm going to stop there because I think there's a few more that have just popped in, but there's two that I'll answer real quick. So there's definitely some complication when you're dealing with a consolidated group, a group of companies that's not just one business when you've got other businesses. There are a couple different elections that are allowed for an affiliated group, and there's also a consolidated mechanism of calculating revenue to make it easier on the person who's applying. So I think the message there is that if you have a consolidated group, it's a little more complicated, but CEWS is still for you as well. The other question that came in was with respect to non-arm's length sales in dealing with a sister company in particular. There is a provision under 125.74B, D, sorry, that allows for a, generally speaking, what it does is it puts the Canadian entity in the shoes of its related party that it sold all of its product to. So if its related party has a revenue decrease, a revenue decline, then the Canadian entity will as well. But you have to meet a couple of different criterias, and one of those criteria is that it's all or substantially all, which is 85 to 90% of your sales.
I think it's good to note also that there are calculators online, so you can do your calculation online, and the application form doesn't ask you to do any calculation or reporting on what your revenues are or what you expect they're going to be or anything like that. It's really on the data that you have on your employees. The other thing to note is that they have employed 2,000 extra telephone line responders at the 1833 number that you're going to be receiving when we send out the information from this webinar.
Yeah, I think, Nancy, the one thing that I'll quickly share is the application screen itself, because even though it doesn't say anything about the revenue, I'm not sure if everybody can see that. Can you guys see the screen now? What it's attesting to here is essentially we're making it as easy as possible for you to apply, but you're attesting from 1 to 12 that you better have all that, and you're certifying it, and one of those things is a revenue decrease. And
Right.
at the end of the day, you're clicking this box and you're putting your name in there, and whoever name is right there is the name that the legislation calls for can be subject to criminal penalties and a 25% penalty to the actual business itself. So even though it's not, the revenue input is not required, they're very serious about you having that revenue decline.
Right.
Okay. I think we have one last question that we'll have time for because it's shortly after 1 o'clock. We had promised to wrap up by 1:05, and that's a question about programs for sole proprietors. Are any of the programs that we talked about today appropriate for a sole proprietor? And if they're not, what would the panel recommend?
I know that there's going to be monies available for COVID response being distributed by the Community Futures for those that are in the county. And FedDev is also going to have some programs available for those who don't qualify under these various programs. So that may be a source of support, but we don't know what those programs look like at this point in time.
We think, Nancy, also that the rent relief might apply to sole proprietors if they have a business.
Yeah,
And also the CERB would apply for sole
absolutely.
proprietors.
Yeah.
Right. Okay, thanks so much. And again, with respect to time, gosh, just so many questions here and there's so much information. It makes me realize that maybe we need to start considering perhaps a phase 2 or a part 2 to this here sooner than later. And we'll talk about that offline. But for right now, I think just consideration of the clock, if I hand it over to Nancy. I know, Nancy, you had a few things that you wanted to dial in on and put a bit of a recap on this for a little bit, and then we'll sign off from there.
Well, sure. Yesterday, the Premier announced the roadmap of getting back to work. And one of the things that we know is going to happen is that there's going to be some extensive consultation with business. And I encourage you to work with CAM, with Automate Canada, with CTMA, to make sure that they know what your issues are around getting back to work. There is support available for those that are ramping up production for COVID projects. Most of you that, well, I guess 1/3 of the membership in the survey has said that they are doing things for COVID response. And so if anyone wants to pursue any of that, I have lots of information about that. And the links are going to be circulated afterwards to everyone. We do have some regular programs that are still available. SWODF is still open for applications for anyone who's looking at investments. And we also have COJG that's open for in its modified forms. And there's a number of other taxes and interest penalties and so on, GST, HST, customs duties, employer health tax, and so on and so forth, WSIB deferments. So there's a lot of provincial programs and other programs, federal programs that may be of interest to your companies. The links that you have to the federal programs are ones that I would encourage you to keep on track up with. And if there's anything that we can help you with, any of us, I'm sure, are willing to help and work with you as you move forward with your business plans.
Yeah. I see Jason got a screen up here, so anyone get your cell phones out and take a quick snapshot if you need to. There's a lot of links and a lot of information that's being shared here.
Yeah, these are a lot of the links that Nancy was mentioning.
Yeah. So, gosh, an hour's gone by so quickly, and I realize we've got so much more content to get to. I guess as a wrap, I guess the next step is we're going to take the information here internally. We're going to kick it around the room a little bit and try to come up with a bit of a summary. What that's going to look like, I don't know just yet. But from our panelists to our internal team in the mornings at 7:30 a.m., we're going to spin the results around a little bit and try and get a one-pager out to everyone who's on here. This session is being recorded, and I would suspect the next one will be as well. If and when that's going to happen, I don't just know just yet, but stay tuned for more. Thank you so much for everyone for attending. Thank you to our panelists. And thank you for the overwhelming response to the study that went out. We nearly hit 100 people here on the register list. So thank you again so much. And again, to all everyone in the audience, feel free to reach out to either myself or to Shelley, and of course on a one-on-one basis to all of our panelists front and center. So with that, Shelley, any final comments going around? No.
So Mike's now conducting this like he does his board meetings at CAM. But just thank you to everyone. You were spot on with your questions. Our panelists did a great job and we're clearly very well prepared for today. There have been so very many questions about these programs, and we'll just keep doing what we've been doing in terms of staying in touch with our membership, in touch with the manufacturing sector in Ontario, and keep advocating to do the best that we can do for the industry, so we're all very well positioned for that return to full recovery and that gradual return that's starting right now.
Yeah.
Thank
Thank you.
Exactly.
Thank you.
Thanks,
Everyone.
everyone.
Have a great afternoon.
Thanks, Cam.
Thank you.